What is up, everybody? My name is Elijah. We are back at it again with another backtesting video. I promised you guys a video on Monday when I got back from my vacation. I just was not prepared for that. I was seriously jet lagged, and I just needed some time to get back into it. But it is the following day of the expected video, Tuesday, and I saw an opportunity present itself in the market today that I wanted to share with you guys. So when we hopped on the charts, first thing we did is check overall trend. Where are we at in the market? Where's market looking to go? Where's price wanting to fill in at? So I checked our trend. We are in a bullish movement. Okay, we had just swept this high, but it looks like we are consolidating at this high and contemplating whether we want to go higher or lower. So using our analysis here, we're going to assume it's going to go higher because the chart is telling us so at the current minute. So then we move down to our 5 minute and we look at what is going on. Right before market closed, we formed a 5 minute fair value gap, and everything still looks somewhat similar on the 5 minute, just a little messier. So it's time to look at the charts in the 1 minute and see if we can get an entry in here. We notice that market open, we had a huge drop to the downside. We took one low, we took two low, we took three lows to the downside. At this point, price started wicking and rejecting. What does that tell you? Price is starting to respect this range. We start moving up. We get a 3 candle wick up to the fair value gap, creating a BPR. This is what we like to see. This is an area of entry where price is likely to reverse at or to cause a continuation. So now we're waiting for more confluences here. We had a fair value gap turn into a BPR, and we're waiting for our EMAs to cross with another fair value gap. So we let time play out. EMAs crossed, and there was our fair value gap. Okay, this is where we would like to enter. Price dropped down into our fair value gap. Let's just say fuck it, we're doing our market order. Okay, we set our low or stop loss below the BPR, and for my entry model here, we target the highs, nearest points of liquidity. So we could go to this high, but we have this high following it right above that. And whenever you have conflicting zones like this, I always just target the greater number, the higher number, or the lower number, vice versa. So we set our play here. We have our confluences lined up. We have overall structure of the market, overall trend. We have identified that we have went from a bearish trend into a bullish trend, aligning our overall time frames. We found a fair value gap. We have our BPR supporting, and our EMAs have crossed. So we let the trade play out. Let me just speed this up here. Price respected the BPR clean, and we snagged our high. There you go for your trade. Now you can see opportunities like this all the time in the market. Just make sure your confluences make sense and they line up. You could have, if you didn't enter down here, you could have had plenty of places to enter following the trade afterwards. There is no such thing as FOMO, okay? If you see that the opportunity is still there and it's reasonable and you feel like you can make it happen, let's make it happen. Find a spot to enter in at. Here you had a fair value gap, okay? On the way up, this was literally, what is that? Almost an hour away from when I entered my previous trade. You could have found another one. Price formed another fair value gap. You wait for price to push down into the fair value gap, and you enter. Stop beneath the low. Stop beneath the fair value gap. At target of 1 to 3. I can't get exactly 1 to 3, but look, you see, you blew it out the fucking waters. If you held 7.39, I mean, come on. You can't overcomplicate this shit. Use fundamentals and follow through. Make sure your confluences make sense and they align with each other. Don't overcomplicate it. When you sit there and you get nervous and you freak out, like when you see this price coming down here and you know what the fuck a BPR is for, but you realize, oh, it's coming down. This is not a time to freak out. You already established this ahead of time and you planned ahead of time. You know what your confluences are. You gotta follow through with it. It's time to sit on your hands after you enter your trade. It's time to focus. All of it. You gotta make sure you're locked in and you're paying attention to what you need to be. Like, let's see what this was here fully. If you could have got in right here and you held all the way. Where's price at right now? Price all the way up here. Cool. We entered in right here, this fair value gap. We'll see what this would have been. Now, it's not very recommended to hold all the, oh no, I entered it this one. Sorry. It's not recommended for you to hold all night. But if you see the opportunity and you feel it going in your way, you're in there. You're in there for real. And look at that. That's in one trade, one day. You could have been set. That's a significant amount of gain for your account in one trade. And you could be fine with that all day. You should be fine with that all day. If your risk management is proper, this is a good setup. And if you listen to yourself and you follow your confluences and you make sure your biases align and just simple things, you can make great things happen with your trading. All right, I don't really got much else for you guys. I just wanted to show you that, I mean, opportunities are there all the time. I mean, I'll put you on. Look, fair value gap indicator. It's like IFVG something. Look it up on indicator. Helps you spot indicators if you can't see it yourself. Very simple. I mean, this is very obvious to me, but I use these indicators, session highs and lows, to make it more obvious to the eye if you just don't want to sit there and strain. Okay, helpful for you guys as well. These things, don't listen to gurus online. Okay, if seeing an indicator mark out a fair value gap helps you trade better, then so be it. Okay, maybe they don't succeed with it. Some people, everybody trades differently. There's people that get in and out of trades in a second. There's people that hold trades all day. You got to find something that works for you and stick with it. Okay, so don't listen to people online. I used to hear that all the time. People used to talk shit. You use a fair value gap indicator. You use liquidity point indicator. You use EMAs. Ugh. Okay, and so what? It does not matter at all. Everybody trades differently. You can figure out your own things as long as you're profitable and as long as you believe in yourself and you keep and stick to it. It's very important. Very important. I mean, obviously after time, you'll notice these things on your own. And that's likely. That's just what's going to happen. But it's just good to have a reminder there. So, sorry for the little spiel. Just wanted to let you guys know. Don't listen to don't listen to people hating. Don't listen to people critiquing. Do your thing. Do what works for you. Follow through. And just stick to your goals. Stick to your rules. Make sure nice shit is right. Now look. You can see another opportunity here for an entry. Not going to hold all the way, but I will update you in the next video. Because I'm starving. I'm about to go eat. But yeah. I hope you guys have a great one. Yeah. Have a good day. See you.